Hi, I am Ashikur Rahman. Welcome back to my channel Accounting Celebrity. Today I am going to show you the 5 ways you can calculate the margin. Margin is very important formula in accounting. When students try to figure out this margin, they often get confused because often these are very tricky. So let's get started. Okay, look at here. There are 5 different ways of question given. First one is sales for the year is $40,000 and cost of sales is $30,000. So here sales for the year is $40,000 and cost of sales is $30,000. So already you know that margin equal to gross profit divided by sales times 100. Okay. So but here you have sales, you have cost of sales, so easily you can calculate your margin. Okay, so look at the formula. Margin equal to gross profit by sales times 100. Okay, now if you put the value here, your gross profit is not given, so already you know that sales minus cost of sales equal to gross profit. Yeah, so here is sales, so times 100. Look at here, so sales is here $40,000 minus cost of sales is $30,000 divided by sales $40,000 again times 100. So what is your answer? If you calculate, your margin is 25%. Okay, so when you have sales and cost of sales, easily you can calculate your margin. Okay, so let us see second option. Sales for the year is $40,000 and markup is 33.33%. So in this question, there is no cost of sales, there is no gross profit. Just you have the value of sales and you have markup. Okay, so in this question, how to calculate your margin? So if you use same formula, you cannot calculate because you don't have here gross profit. Okay, but you have here sales. So here in this case, you need to find out your cost of sales first of all. Okay, so how to calculate cost of sales? Look at here, cost of sales equal to 100 divided by 100 plus markup times sales. If you apply this formula, you can calculate your cost of sales. When you will find your cost of sales, it will be very easier for you to calculate your margin. Okay, so let us write here the value 100 divided by 100 plus markup is 33.33 times sales. Okay, so you have the value of sales here $40,000. So right here $40,000. So if you calculate, your answer is $30,000. Okay, this is your cost of sales. Okay, so now if you apply this first formula, that gross profit divided by sales times 100, you can calculate your margin. Okay, so this is the way you get question often in exam. Okay, don't be confused next time. Try to apply this formula to get the answer. Okay, so next one, number 3. So here, what is the formula? Sales equal to markup plus 100 divided by 100 times cost of sales. When to use this formula? When you have your value of what? Cost of sales. Your cost of sales is given. Look at the question. Cost of sales is given $30,000 and markup is given 33.33. So previous one, number 2, you had sales. Here you have cost of sales. Okay, so if you apply this formula, you cannot find the answer. Even this one, you can calculate the answer. So you have to calculate first of all your value of sales. Okay, so when you will have the value of sales, you can minus from you can minus that you can minus this cost of sales to calculate your gross profit. Okay, when you have gross profit, if you apply this formula, you can find your margin. So here, how to apply? So you have markup, which is 33.33 plus 100. This is the formula, divided by 100. Okay, then you multiply by cost of sales, which is $30,000. Okay, now if you calculate, your sales value is $40,000. Okay, so you calculated your sales. Now you apply this formula, use this formula, you can now find your margin. Okay, it's very easy. So what about next one? Number 4, look at here. Gross profit is $10,000 and markup is 33.33%. So this is another tricky question. Here you don't have any sales value, you don't have any cost of sales. What you have? You have gross profit and you have markup. So you need to calculate your cost of sales or sales, value of sales. Then you will be able to figure out your margin. Okay, look at here. So let us apply this formula. Number 4, sales equal to markup plus 100 divided by markup times gross profit. Okay, GP means gross profit. So why did we multiply by gross profit? Because here we have the value of gross profit, nothing else, no sales, no cost of sales, just we have gross profit. So this is only the value by which we can calculate our sales value. Okay, so now use this formula, put the value of markup, then you add 100, then you divide by markup 33, then you multiply by your gross profit. GP means gross profit. What is your gross profit in the question? $10,000. Okay, so if you use calculator, you can find your answer, which is $40,000. This is the value of sales. So see, different terms, different way you will get margin from different question. Okay, let us work out on number 5. What is given here? Sales for the year is $40,000. Inventory 1st January 2020 is $7,000. Inventory 31st December 2020 is $13,000. Rate of inventory turnover is 3 times. So here, how to calculate margin? Here you have to find out your margin now. Okay, so you have no cost of sales, you have no markup, just you have the value of sales, you have your opening inventory, you have your closing inventory. Okay, suppose your business years means your accounting period starts from 1st January and it ends 31st December. Okay, so this will be your opening inventory and this will be your closing inventory. Okay, so in this case, if you get question like this way, then you have to use different formula. If you use this first 4, you will not get answer because your all components are not given. Okay, so look at here, we have to calculate here the cost of sales. Okay, so cost of sales equal to what? Average inventory times rate of inventory turnover. Okay, so you need to find out your average inventory. Do you know how to calculate your average inventory? It's very easy. How to calculate? Average inventory is what? Opening inventory plus closing inventory, yeah, plus closing inventory divided by 2. Okay, so opening was how much? $7,000. Closing was $13,000. Okay, divided by 2. So your answer is here $10,000. Okay, $10,000. Now what do you need to do? You use this formula now. So your cost of sales will be what? Your cost of sales will be your average inventory, which is $10,000. $10,000 times rate of inventory turnover, 3 times in a year. Okay, so you multiply it by 3. So your answer is what? $30,000. This is your cost of sales. So now you can easily calculate your gross profit to figure out margin. Okay, so your gross profit is what? Sales value $40,000 minus cost of sales equal to gross profit. Okay, so gross profit divided by sales times 100 is margin. Okay, so this is 5 ways I showed you how to calculate margin. If you have more question, then you comment below. I will make another lesson for you. So that's all for today, and subscribe my channel, share this lesson with your friends. You stay safe and take care.